Hello everybody, welcome back to Financial Trading Basics Part 41, Valuation Carnage. It's all before we sit down, everybody rise. Let's have a moment of silence for the executives and shareholders over at Teladoc. It has been a breathtaking past couple of days for a wonderful company, Teladoc. They've seen substantial appreciation in their asset prices. They've seen substantial company morale, and they've just executed a great move upward of minus like 50%. So, thank you for taking a moment of silence. Now we'll get back to original programming. I guess that really wasn't a moment of silence, I was just talking. But Teladoc, let's bring that up. I got a lot of articles to talk about today. We'll be talking about Elon Musk again buying Twitter. So we've talked about that a bit, some more thoughts there. But we have some very Elon Musk, the world's fittest man, gets a direction from Kermit the Frog over at Microsoft, which I thought was fucking hilarious. I guess Kermit, that's Bill Gates, I guess he's got a $500 million short on Tesla. Archegos, I don't know how to say that word, Saladame, says what laws? And we'll talk about daily active users and yield curve inversions and tender offers. So first, again, Teladoc visits Meta, which is Facebook for our dude, the wannabe reptilian Mark Zuckerberg, and Netflix in the valuation graveyard. Some extreme valuation carnage. Teladoc, or the T-Doc. Yeah, so let's... Oh, this is a good one. Oh my goodness. Oh, from a peak of 308 in the beginning of 2021, all the way trading down currently right now on 428 minus the 8, nice, at 1157. We're seeing 2887 prints. Absolute fucking carnage. So, yeah, that is a substantial. I don't know the percentage, but that is impressive. That is impressive. What did Meta do? I'm looking at 3-year. Again, I don't have an office. I don't have Duncan to pull up the charts. So we're just gonna go with. You can look it up if you want. Come on, Meta, load. I don't know why it's not loading. I'm on my Thinkorswim terminal. Netflix. Is that one gonna load? NFLX. That one's gonna load. Oh, $701 from October to $185 today. And Facebook, it still might be under Facebook, that's why. Oh yeah, I was seeing on CNBC today, big bounce for Facebook. Yep, from a high of 384.33, all the way down to just the tip is over 199.50 right now. So, again, the valuations, I told you, again, the overshoot and the retracements will be less severe, because look at this carnage. The valuations are just getting destroyed. They're getting toppled. It's absolute chaos out here. But overall, what do I think about the business models? Facebook, Teladoc, and Netflix. We've talked about Netflix, again, subscription service specifically, and Spotify. I don't think they visited the graveyard yet. But what is there? It's just spot. Oh no! I take that back. I take that back. They are also eating hot shit. So just talking about the actual business models, because again, the overshooting valuation. Again, that's what I'm saying. People buying momentum, whether the momentum's a day trade, a 3 to 5 day trade, or a 2-3 month appreciation or 2 to 3 month growth. People are going to get all excited about the growth and go into denial as it just capitulates through the fucking floor. But Meta, just advertising, obviously they have a tremendous market share. A lot of young people don't really fucking use it, but can you have another social media takeover? And now some unique functionality, like TikTok is shorter than YouTube and filled the market in a unique way. So I don't think there's room for another humongous social media like so without unique functionality, like Clubhouse. Again, I was never on Clubhouse, so I don't know what the fuck a Substack is. I don't know if that's social media or just like academic stuff. I don't even know what that is, but I personally I put 75% confidence. There's not room for another tremendous blow up such like Facebook had originally. Or MySpace and Facebook, again without unique functionality. I don't know what that'd be. Could be wrong. 75% confidence. Netflix, again, subscription services based on original content or just content you can license and sell, TV shows, and really sketchy business model versus Spotify, who's I take that back. They have also achieved valuation carnage, but movies, TV versus music streaming, again, both of them, I think Spotify has a more dominant market share in relation to, right, Netflix, Peacock. I'm a subscriber of Peacock because instead of watching the Yellowstone, I'll probably watch what's Ray Donovan. I think that's another crime show I've seen a couple times. I might check that out also on Peacock. You got Peacock, you got Paramount Plus, you got Hulu Plus, you got CNN Plus. Oh, not anymore. You got what other ones you got? I don't know, but there's just a bunch of streaming services. Whereas in like Spotify, I think is a more dominant market share. And again, there's probably data for that. I have not looked it up, but I think Spotify would be more resilient. But again, valuation carnage is valuation carnage. Buying momentum is buying momentum, and that's what you're seeing with all of these companies. So I think Spotify will be. I don't know. I can't even say they've already capitulated. They're already taking fat shits everywhere. But I think overall sustaining market share would be easier for the music at the current company level of what's going on. Teladoc, again, I've told you about the wonderful. I think I did WebMD. Did I use Teladoc? I don't think I used Teladoc. PlushCare was the one that treated me like shit and gave me the wrong prescription. Then I called the other one. They're like, why did you get that one? It's like, I didn't prescribe it to myself, John. So I don't know if I don't think I've used Teladoc, but I've used online doctor services. I do think it fills some market share. Again, because I have no insurance. If I have a trivial expense, I can pay $30, $40, and have a prescription between $50 and $150 one time. It's worth it, as opposed to paying a minimum of $12,000 a year in healthcare premiums before your insurance even kicks in and stuff like that for like trivial stuff. Again, I think the healthcare system in America is absolute fucking ass shit. So, Teladoc, I just didn't know how much market share they have. Again, I'm not gonna, because when I look at when I go on to analyze and look at the balance sheets of these companies, I just know what metric am I looking at that really makes me say I'm gonna invest in this company. Because we had, after Netflix took a fat shit, all of the price targets went from like 360, 380, 400 to like 220, 120. So it's just, people are just reacting to sentiment change. So I'm looking at the balance sheet for Teladoc right now. Again, like I said, I like obviously debt going down, revenue going up. Long-term debt to capital on Teladoc is not looking too hot. Oh no, I think it's going down. So, but again, there's just nothing on here that's like, yeah, makes me more convincing of an investment for me. It's the overall market environment. Again, like I said, for healthcare, I'm buying the alternative healthcare, which isn't alternative at all. So, I bought another 1,000 shares of MNMD. I'm not actively trading because I still do not have cash flow. My father asked me at Easter, he's still doing stocks, still literally don't have cash flow. Doing as much stocks as I can. But, so like again, the shift from watching every FDA-approved medicine on the TV have 30,000 listed side effects and increasing your chance for rabies and AIDS and spina bifida to cure your headache for 5 minutes. Or we can take cannabis, which should have been legalized. Oh, yeah, good job, Schumer. Good job, buddy. You're doing so well. You're a man of your word. Yep, you're in violation of biological law, and that's not going to go well for you, man. So, I look for trades. I look for extreme inconsistencies, discrepancies. This healthcare definitely works. LSD, psilocybin, DMT, cannabis, all of those things work. LSD have tremendous therapeutic effects. So it's like, that's going to actually kick in at some point. It's going to do stuff. So, I would just looking at a balance sheet, I don't know what is a convincing metric, I really don't. And I've been doing this stuff for several years now, probably 8 years continuously. So, moving on, Elon Musk, the world's fittest man, gets a direction. His, I think his exact quote was, "If you want to lose a boner fast," or something. It's a picture of Bill Gates and his fucking stomach just oozing over his belt. But again, I try to look up Elon Musk. Also was rather plump at one point. I try to find that picture. Again, I'm not going to put it up here. I would do minimal editing because, yeah, 43 subs, baby. Still, just the growth has been exponential. But, so, Bill Gates there's a confirmed, Bill Gates was interested in talking to Elon about philanthropic events, and Elon's like, "Nah, bro, you're short my stock, dog. Why would I want to talk to you?" And so he said, "I heard from multiple people at TED that Gates still had $500 million short against Tesla, which is why I asked him, so it's not exactly top secret." And he says, "Yeah, but I didn't leak it to New York Times. They must have got it through friends of friends." He said, "Friends? That's cool. Still working on that. No constitutional rights, no substantial income. You guys do friends? That's gonna be pretty cool." Gates says, "Sorry to say I haven't closed it out. I'd like to discuss philanthropic possibilities." Musk says, "Sorry, I can't take your philanthropy on climate change seriously when you have a massive short position against Tesla, the company doing the most to solve climate change." Yeah, Elon Musk just bought Twitter for free speech. We'll talk about that deal in a second. For the company doing the most to solve climate change. Yeah, no, that's the self-proprietorship of the Trap Scholar, the host of the Financial Trading Basics and all the other lecture series. It's me. So, no, Elon Musk, if you wanted to promote free speech, again, which is amendments, part of the Constitution, ratified law, but the bulk section of the United States Constitution, Article 1, Section 8, Subsection 7, "I have a right to my writings and discoveries." If you want to help the planet, you support that. But again, beta male and female society, we're not going to do the thing that actually is going to help. We're going to close off, push Brett out, form a little group, and sing "Kumbaya, we're all great people." No, everyone's just terrible. Everyone's fucking thieves. But that's about it. I thought the picture of "if you want to lose a boner fast," I thought that was fucking hilarious. Tesla's not doing the most to stop climate change. In fact, it would be filtration technology, more so than electric vehicles in any capacity. But on the actual Twitter deal, any other thoughts? Because I was watching some Ben Shapiro, some employee responses, which I thought was weird. Again, seeing people like, "Oh my gosh, is it early enough for wine?" The answer to that is yes. But, "Oh my gosh, I'm so distressed. I need alcohol to calm my nerves because my company got bought." Again, reflecting of immature behavior, underdeveloped human beings. "Oh my gosh, I need a substance to cope with things." "Now, Brad, you drink beer?" "Yeah, I just have to get to tomorrow. There's got to do something throughout the day." Have I ever needed anything to cope with anything? No. Just the hardest fucking no. So, "Oh my gosh, I'm so pathetic. I can't get through this purchase of our company. I'm employed. I probably have a sexual partner, a home, and kids. I'm just so lost in the world." How do you guys make friends and shit? Like, how does that happen? They fit into groups without getting scapegoated. So I thought the employee responses, I can't even say I agree with Ben Shapiro, but yes, you should fire a lot of them. And Ben Shapiro should be in jail. Ben Shapiro for jail. But public source, open source the algorithms, I 100% agree. Even apolitically, like when I just want to see what on my YouTube thing got me age restricted on one video. When I've had very tense interactions on several videos. Maybe they just haven't been viewed. I don't know. But I was just to see why. Again, I'm personally literally documenting crime. But just in general, I totally agree. It's just why? Why is this thing allowed? Why is this thing isn't allowed? It would just be, again, apolitically. And then because Twitter's the alleged shadow banning, Eric Weinstein throttling accounts. Yeah, no, you guys throttled me when you fucking kicked me out of the entire human species. In direct violation of the United States Constitution. Still today. I and I'm offering $1 million for it to stop. Literally. Yep. Best of luck, Brad. Have a good one. See you soon. But Elon says he's going to public source the algorithms. And from rhythm to algorithm. I wonder who did that lecture series. Oh, that's also me. And again, Ben Shapiro says algorithmically like 15,000 times in the past videos I've watched. But limiting bots with a blue check mark, saying everyone pay $2.99. Do I think that would? Again, I haven't been on Twitter since Nom. I'm just again tired of being on social media where people will just scroll through to watch cat videos as I'm literally making the most contributive scientific discoveries ever, and I can't get my property to leave being tortured and start a family. So I had to get off that one. But $2.99 for a blue check mark, would that limit bots? Yes. Would that affect the user base? Probably not. I don't know. 50-50. I don't know if people would pay $2.99 for Tinder or for Twitter. But Elon Musk is a free speech absolutist. Well, and then his actual statements that he said that at one point, but then he said, free speech in accordance with the law, which the law is not being publicly disclosed because of the law doesn't count because facts it just doesn't. I don't know. But then he's like, in accordance with the law, and so I thought that was again normal. So again, just to see cheers or excitement from the right or devastation from the left, grow up. Gotta grow up. So now, moving on, Archegos says what laws? So as we've established through every day of me existing, the laws only account if you're part of the beta male-female society. Past that, they just kind of don't. Just kind of trying to get into the group still, trying to penetrate deep into, with my anti-direction, I'm trying to penetrate deep into the human participation world. That is not something I get to do. So Archegos was kind of vibing out to that too. Also like, yeah, fuck that. We don't need no laws. Insider trading, false advertising, fraud. Who cares? The owner of a New York-based hedge fund that collapsed when it defaulted on margin calls was arrested Wednesday on charges allegedly he defrauded leading global investment banks and brokerages of billions of dollars by telling them lies so its private investment firm could grow its portfolio from $10 billion to $160 billion. Going from pennies to pennies, and $10 billion isn't pennies, so I don't know what the thought was there. Again, this is another beta male. I don't know, dollar go up, more nuts for winter. Gotta put them away. I'm gonna go broke with $10 billion. Granted, I don't know how many people, what his cash flow burn rate is, stuff like that. But the charge is unsealed in an indictment, and this is off of MSN.com. Indictment in Manhattan federal court named Sung Kook Bill Huang, the founder of Archegos Capital Management, and his former chief financial officer Patrick Halligan. Both were expected to appear later that day in court. They face racketeering, conspiracy, and fraud charges. Again, is this RICO or is this just racketeering? Because again, racket, conspiracy, where two or more are gathered, you're committing super conspiracy and racketeering, says every single investor, every single academic in the entire world. But, well, as long as enough people commit the crime, it doesn't count. So, Bill Huang is getting convicted of conspiracy, fraud, and racketeering, but not the United States government or every single other fucking person stealing from me. That's interesting. Huang carried out the alleged fraud from March 2020 to March 2021 by originally investing his personal fortune, which grew from $1.5 billion to over $35 billion, and later the investments he borrowed from major banks and brokerages, which grew from about $10 billion to over $160 billion. Why? Oh, he's so broke, only $1.5 billion. He just needs to grow. But again, it's a beta. Again, dollar go up, more. It makes me feel good. I don't know how to behave. Can't sit down and play a musical instrument. I can't go walk around nature and just enjoy my family. Ugh, more dollars, more hair gel, another plane ride, another home, another car, another boat. Yeah. Oh, jail. Thanks for playing, Bill. Millions of losses for employees, all good. It said the schemes also caused millions of dollars in losses for innocent Archegos employees who have been required to allocate to the firm a substantial amount of their pay as deferred compensation. Again, just arrogance out the wazoo. Oh, Gary Gensler, classic Gary. The collapse of Archegos last spring demonstrated how activities by one firm can have far-reaching implications for investors and market participants. Yeah, what a shock. We allege that Huang and Archegos propped up a $36 billion house of cards by engaging in a constant cycle of manipulative trading, lying to banks to obtain additional capacity, and then using that capacity to engage in still more manipulative trading, said Grew Wall, director of the SEC's Division of Enforcement. But the house of cards can only be sustained if the cycle of deceptive trading, lies, and buying power continued uninterrupted. And once Archegos' buying power was exhausted and stock prices fell, the entire structure collapsed, allegedly leaving Archegos' counterparties billions in trading losses. How do you even fucking do this, Bill Huang? The fuck is that? Like, it's just again, uninitiated criminals. They dip their toe in the water and they can't see any way out, so they just keep digging a bigger and bigger hole, and then straight to jail. So that was absolutely fucking hilarious. Another great demonstration of quality character of beta male society. So we'll finish with some terms and some other thoughts. So what is first I want to talk about? Daily active users. Does that mean anything to me as a metric? Kind of. And what metric of a subscription model business I would not, again, I can't even say that because I've seen a couple, like, I don't have any great examples, but like maybe not even like food delivery, but there's some, I initially, like, I don't see why a subscription model wouldn't work, and you can think of some ideas why it would, but I just don't like the ability for a consumer just to like cancel. And then you're on the idea of a public company trying to grow over 2 to 5, 10 years. And so as opposed to, you sell a camera, buy your camera, you get the revenue, it's a much more, I think, like trackable, has stronger metrics for future performance as opposed to a subscription model business. But daily active users for internet thing, it's not really a subscription model, but sure, but again, it's transient to me, just like the subscribers would be. Or you can have daily active users today, a hot video game goes viral for 6 months or maybe 2 years, and then never even gets played again. So it's like daily active users would even be more transient than subscribers, because even if you subscribe, you still have to have 30 days or something. Like if I cancel subscription, I'm still good till the end of the month or something. So daily active users as a metric, and again, specifically for investing, actionable advice, really doesn't mean anything to me. Maybe on a momentum upside trade, right? If you were initially on TikTok, I don't know about Spotify, I do subscriptions. TikTok, YouTube, I do subscribers. Netflix, I'd be subscribers, but like Facebook, TikTok, Instagram, it just depends. Like I said, maybe a substantial increase in daily active users or a substantial decrease. But again, just another very flimsy metric to me. It doesn't give me much actionable advice. And then the last thing I want to discuss is the yield curve inversion. Does this mean anything to me? And then from Al Lewis at Team CNBC, shout out Al Lewis. An inverted yield curve means the interest rates have flipped on U.S. Treasuries, with short-term bonds paying more than long-term bonds. So the 2-year Treasury note is going to give me 6.9%, I wish, and the long-term 10-year is going to give me 4.20%. So that would be an inverted yield curve. And they said it's generally regarded as a warning signs. Bad grammar, Al. Edit your fucking piece, bro. It's generally regarded as a warning sign or you would drop the A as warning signs, or a warning sign for the economy and the markets. A recession, if it comes at all, usually appears many months after a yield curve inversion. I guess this was I read most of the Wikipedia entry about normal curve, steep yield curve, flat or humped yield curve, and inverted yield curve. It got, again, when I write this stuff down, I'm responding to logical theorems that instantly pop out. When I read a bunch of word salad and nothing pops out, I've not read anything of substance. but economist Campbell Harvey's 1986 dissertation showed that an inverted yield curve accurately forecasts U.S. recessions. An inverted curve has indicated a worsening economic situation in the future 8 times since 1970. Sentiment, investor maturity, we all trade the same shit. The chart reflects human behavior. So, again, a transient metric doesn't mean much to me, but if I make, again, if I'm making more on a short-term bond as a long-term bond, why, I can't even get to answer the question of why and what that would indicate, right? There's different types of debt, right? If I buy a house, which again, I'm not broke like, Bill Smith or whatever the dude from Telhio says, I should know that I do not deserve to own a home after solving everyone's science books for their entire children forever. I still don't deserve to own a home, but I'm not broke, so I don't need a mortgage. But, like, there's different types of debt. If I was buying a house over 30 years, the impetus is the house, right? Where am I going to stay? Where am I going to physically stay? How long am I going to be there? What am I going to do there? As opposed to a credit card, right? I have to pay a way higher interest rate, 16% on a credit card, as opposed to, and I don't have credit card debt either, but credit card debt versus, a treasury note for a house, the motivation for taking on the debt is substantially different. It's an indication of inverted yield curves, especially for, it's the same type of bond, right? The treasury bond. This is issued by the government. So the government's motivation is still going to be to improve economic growth, lower employment, increase economic output, increase efficiency, but the 2-year flipping on the 10-year versus the 30-year mortgage average means nothing to me. It just doesn't mean anything to me. You'd have to have some sort of indicative, different, meaningful motivation for taking on debt, as opposed to, especially again, treasury bond versus treasury bond. Especially, I think specifically 10-year to the 2-year, well, that's not a lot. That's really not a lot of time. In economics, it's 0 time. So I don't even know what the fuck. I think this is just, again, this is a fart in the wind and someone smelled it and it's like, this is something, and it's just like not. It's a coincidence. It's correlation, not causation. So does the inverted yield curve indicate a recession to me? No. Does it indicate anything to me? No. Again, what is a recession exactly? Give me a definitive definition. I'll wait. More dollars, money go up, bigger bank account, less inflation, more dollars, more trips. How about quality of life? Well, that. Because my quality of life is just, whew, that's an inverted yield curve. My short-term, oh no, it's a flat yield curve. My short-term gains and long-term gains are the exact same. It's fucking 0. Flatline in quality of life curve. Thesis by Brad. Don't be a scapegoat, then you can't even fucking exist. So, that's, and I have a bunch of other, maybe not for a language video, but this will be long enough. It'll be a 30-minute video. So that is what I have for Valuation Carnage. Thank you for watching Financial Trading Basics Part 41. And Teledoc, let's finish with an actual moment of silence for Teledoc. Thanks for watching. See you soon.